Hi everyone. We're sorry there was some technical issue due to which the live stream was not getting done on LinkedIn. So we had to create another session and then we had joined this. So basically, the session today is around the concept of permanent establishment, both under the UAE Corporate Tax Law as well as, the relevant explanation as to how this concept plan out under the tax treaty. So the first point that is relevant here is what exactly is the relevance of a permanent establishment. Now, in case of a foreign company, which is looking at working into UAE, it has two options. It can either set up a subsidiary. This subsidiary, if it is not an exempt entity or not a free zone entity, which is eligible for tax exemption, would have paid corporate tax in UAE. However, what this foreign company does is that instead of establishing a subsidiary in UAE, it just takes certain offices on lease in its own name, where the employees, etc., of the company work, and basically the end result is the same. It actually appoints an agent to carry out the activity or works at a particular site. This site could be a construction site. It could be a mining site or something like this. Now, in all such cases, what happens is that if this foreign company gets the income directly outside UAE, it may actually avoid payment of taxes. To deal with such instances, the concept of permanent establishment is there, wherein it is provided that if a non-resident operates in any of the source jurisdiction, in this particular case UAE, through an office, an agent, or a construction site, and this presence is more than temporary in nature, then in that particular case, a permanent establishment can be said to have arisen. And the impact of permanent establishment is that such a permanent establishment is liable to pay corporate tax on the profits that it earns from activities in the UAE. So such a particular profits which have to be paid will be making it at par with a foreign company which has a subsidiary in the UAE. Now, this concept is driven both under the local UAE corporate tax law as well as the tax treaties which have been entered into by UAE with various countries. Under the UAE corporate tax law, it has been provided that wherever there is a conflict between the provision of the UAE corporate tax law and the tax treaty entered into by UAE, the provisions of these treaty will override the domestic tax law. In other words, what that means is that even if you have a permanent establishment under the UAE corporate tax law, if under the applicable tax treaty, you do not have a permanent establishment because the conditions are different or advantageous for the non-resident, in that particular case, the permanent establishment would not come into picture and therefore no corporate tax will be payable. Now, there are two frequently asked questions, FAQ 68 and 76, which are very, very relevant in the context of a permanent establishment. So what exactly do these two FAQs say? So first FAQ, I'll first read this because it is very, very important to understand the taxability of a foreign company. So will foreign companies and other juridical person, that is entities, legal entities, be subject to UAE corporate tax? And the answer that has been given to this is that foreign entities that operate in the UAE through a PE or that are considered resident in the UAE for corporate tax purposes will be subject to UAE corporate tax. So two types of foreign companies are taxable. One, those have a permanent establishment, and second, who are considered as resident in the UAE. A foreign company is considered as a resident in the UAE when the control and management of such a company is in UAE. In that particular case, they will be treated as UAE tax resident. However, further this question further goes on to say that merely earning UAE sourced income, and the answer as to what is UAE sourced income is also given in the regulation. There are various types of income which have been identified and considered as UAE sourced income. would not trigger corporate tax payable or require foreign entity to register and file for UAE corporate tax. So just because you have a UAE sourced income doesn't mean that you have to register and file for corporate tax. There is further clarification on this, which has been provided in FAQ number 76. Now, before we move on, I would like to clarify one thing here, that a branch by its very nature is considered as a tax resident because it automatically qualifies as a PE of the foreign company. The second question is, will UAE investment income earned by foreign investors be subject to UAE corporate tax? And the answer to this that has been given in the FAQ 76 is that income by way of dividend, capital gain, interest, royalty, and other investment returns earned by foreign juridical person or individual will not be subject to UAE corporate tax unless such income can be attributed to PE in the UAE of such foreign person. Now, this is a very, very broad category that has been carved out from the taxability. So effectively, what this means is that if an income is not attributable to a permanent establishment, then such income will not be subject to UAE corporate tax. So it will need to be washed out that whether the reference to all these income is when they are held as investment, right? Or it is a blanket exemption which is available. If it's a blanket exemption, then basically a large part of income of the foreign entities will be something which will be exempt from taxation if the non-resident does not have a permanent establishment in the UAE. Now, considering these two questions, let's look at what is exactly the law relating to permanent establishment under the UAE corporate tax law. So the law relating to PE is contained in both the UAE corporate tax law as well as tax treaties which are entered into by UAE, right? So the rule is that the provisions of the corporate tax law will apply if they are more beneficial. But if the provisions of tax treaty are more beneficial, those are the ones that will be applicable. Now, if one were to look at the provisions of Article 14, the structure of this article is that paragraph 1 deals with cases where a PE arises. And generally, this is the fixed place permanent establishment. Paragraph 2 lists out what are the specific inclusions in a fixed place of business PE. So this would be a case where, let's say, for example, a non-resident has an office in UAE. One of the examples. Like office, what are the other places that will result in a PE is given in paragraph 2. Paragraph 3 clarifies as to what places will not constitute PE, even if they are fixed place of business and covered within paragraph 2. So this basically is an exception to the provisions of paragraph 1 and paragraph 2. And paragraph 4 says that, okay, some exceptions might be there, but if all these exceptions taken together do effectively form a business activity, then paragraph 3 will not be applicable. We'll go through them one by one and you'll understand it. Paragraph 5 deals with the case where an agent of a non-resident operates in UAE and he habitually exercises an authority to conclude contract on behalf of the non-resident. Paragraph 6 outlines who is going to be an independent agent. An independent agent does not constitute a permanent establishment. And paragraph 7 deals with one of the specific cases not normally present in many of the treaties, but in UAE, not present in many of the domestic tax laws, but present specifically in Article 14, which says as to when a natural person would constitute a permanent establishment in the UAE. So let's look at paragraph 1 as to what constitutes a permanent establishment under the UAE corporate tax law. So paragraph 1 says that a fixed place of business in the UAE through which the business of the foreign enterprise is either completely or partly carried on. So if you have a non-resident and that non-resident has a fixed place of business, that could be in the form of, let's say, an office. And if this office is used to carry on the business activities of the non-resident, either entire activity or part of the activity, such that these activities generate certain income, then this place will be considered as a permanent establishment for the non-resident. And therefore, the profits that they earn through this place of business will be liable to UAE corporate tax. The second is a case where a person habitually exercises an authority to conduct business on behalf of the non-resident. Now, let's look at another case here where the non-resident does not have an office, but what it has is it has an agent in the UAE, and this agent is dealing with the customers, etc., of this non-resident, and he exercises, that means he uses the power that has been given to him to conduct the business on behalf of the non-resident. He's representing the non-resident in UAE. Or any other form of nexus in the UAE as may be prescribed in the decisions issued by the cabinet. Now, some of the examples of fixed place of business could be a pitch in the marketplace. So if there's a place in the market where a non-resident comes and pitches for business, this place itself can be considered as the permanent establishment. Now, to constitute a place of business, it is not necessary that the place should be owned or rented by the non-resident. He may not own it, he may not rent it. This could be a case where, let's say, the non-resident has some other group company and it uses the office of the group company. Certain permanently used area in custom depot. So if, let's say, in the custom area, a non-resident has a demarcated place where the goods are stored, the non-resident deals with, who's stationed in UAE, deals with local customers, and this place is used for carrying out the business of the non-resident. Even this place can constitute a permanent establishment. Business facilities of another enterprise can also constitute a permanent establishment for the non-resident. Please allow me a minute. Let's look at paragraph 2, which refers to a fixed or a permanent place of business. So a permanent place or fixed place of business will include a place of management, that is, a place where the management and commercial decisions for conduct of the business are taken. For example, if this fixed foreign company has an office space here, and from this office space where the employees are stationed, the decision relating to the conduct of the business in UAE are taken, then this place of management of the business will be considered as a fixed place PE for the non-resident. A factory in the UAE for a non-resident, a branch in the UAE, and this would be the most common example because many foreign companies operate in UAE through a branch. Now, here, one of the interesting things to note is that a branch can be a branch in the free zone, or it can be a branch in the mainland. Generally, a free zone branch, if it meets certain condition, which includes that, it's a qualifying person and it gets qualifying income, it may still be exempt from the applicability of UAE corporate tax. However, if there's a branch in the mainland, this branch in the mainland will be liable to UAE corporate tax at the rate of 9%. An office of the non-resident in UAE will be considered as a fixed place PE. Any land, building, and other real property may be treated as a permanent establishment. An installation or structure for the exploration of renewable or non-renewable natural resources. So let's say if there is a rig machine that is stationed to extract oil. Now, oil is a natural resource, right? So if there's a machine or a rig which is used for exploiting oil, that will also constitute a permanent establishment. A mine, an oil or a gas well, a quarry, or any other place of extraction of natural resources, including vessels and structures used for the extraction of such resources, can constitute a permanent establishment. A building site, a construction site, or a place of assembly or installation, or supervisory activities in connection therewith, but only if such site, project, or activities, whether separately or together with such other sites, projects, or activities, last more than 6 months, including connected activities that are conducted at the site or project by one or more related parties of the non-resident person. So let me just simplify this. This seems to be a little bit complicated. So let's say, for example, there's a construction going on here, right? A construction site, let's say. If the non-resident is providing services in this construction site for a period of 6 months, more than 6 months actually, right? In such a case, this particular site will become a permanent establishment for the non-resident. Now, if the non-resident is not acting in construction of this particular site, but it provides its employees who are doing supervision activities, then this will be treated as a permanent establishment. In some cases, what can happen is that instead of one, there may be more than one site, where these sites are in respect of connected activities, then the total time spent on both these sites will be clubbed. And if that period is greater than 6 months, then the non-resident will have a PE, even though each of these individual sites may be for less than 6 months. Now, generally, when you calculate the number of days or the period, what happens is that one day is considered as 1 day only. So let's say, even if there's an overlap on the time, so let's say first site is from 1st January to 31st May. The second site is from 1st of February to 31st May. Now, this site has been there for 5 months. This site has been there for 4 months. But when you look at the overall period, that is still 5 months. There will be no PE in this particular case. But if instead of this site would have been there till, let's say, 31st of August. In that case, the total period here was 7 months. Here it was 5 months, right? Because one of the site existed for more than 6 months. If these are connected activities, both these project sites will be considered to be there in a PE, and therefore the profits earned in both of them will be liable to UAE corporate tax. So generally, a PE definition that is given in Article 14 is an inclusive definition. The foreign enterprise to constitute a PE in this particular paragraph should have a fixed place of business in the UAE. The business should be carried on from such place. Now, this is also important. A non-resident may have an office in the UAE, but if this office is not used to carry on the business, then this office doesn't become a PE. The place should be used to carry on business. The foreign enterprise's business may be carried on either wholly or partly through such place. The determination of PE is an annual exercise. What this means is that a company may have PE, let's say in 2023, and may not have a PE in 2024. Or vice versa. It may not have a PE here, but it may have a PE here. So every year, based on facts, this exercise has to be done. Now let's look at what are the specific activities which are exempt from constituting a permanent establishment. So if a non-resident is engaged in only storing, displaying, or delivering goods or merchandise belonging to that non-resident, then that does not constitute a permanent establishment. Keeping a stock of goods or merchandise belonging to the non-resident for the sole purpose of processing by another enterprise, or purchasing goods or merchandise, or collecting information for non-resident. We're going to look at each one of these in detail, and that's the reason I've just read through this. Undertake any other activity which is preparatory or auxiliary. Any combination of activities mentioned above if the overall activity is preparatory or auxiliary. Let's look at each one of them one by one. So the first one is storing, displaying, or delivering of goods or merchandise belonging to that person. In this particular case, if you see, there's a foreign company, there is a warehouse, and there's a customer. So what the foreign company does is, it has a website through which it does online sale. The customer goes, sees the product on the website, makes an order, the acceptance is there, the payment has been done online. But the foreign company, in order to ensure quick delivery, has hired some space in a warehouse of a third party from which the delivery happens. Now, this is an example of a case where the goods have been stored, right, and delivered belonging to a non-resident. So this warehouse by itself will not become a permanent establishment so long as the use of this warehouse is for storing, displaying, or delivery of goods. Display would be a case where, there are foreign companies which open up showrooms, which are only experience centers. You just go see the product, but if you have to order them, then that ordering cannot happen in those stores. The second is the case where a person keeps stock of goods or merchandise belonging to the non-resident, but only for the purpose of processing. So what happens here is that there is a foreign company. It, let's say, is engaged into manufacturing of certain products. It makes the raw product outside UAE, and then this raw product is sent to a toll manufacturer who's based out of UAE, who just processes these goods. And once the process is completed, he sends it back to the foreign company or to a customer outside UAE. In these two cases, just because the goods have been processed in the UAE would not result in having a permanent establishment for the non-resident in the UAE. The third is a case where there is a place of business in the UAE, but this place is used merely for the purpose of purchasing goods or merchandise for the non-resident person. So if, let's say, there is a particular good which is sold here, this place is used for the purpose of procuring these goods, and then these goods are transferred outside UAE. The use of a place only for procuring goods will not mean that this place becomes a permanent establishment for the non-resident. The next is a case where there is a case of collection of information. Now, merely collecting information for the non-resident would not by itself result into a permanent establishment. Now, we all know that there are various international news agencies and they collect information. These information might be collected locally, and then this collected information is disseminated to the head office for the purpose of editing, etc., and then telecasting and broadcasting. In such a case, if a person is just collecting information in the UAE, that person by itself will not become a permanent establishment for the non-resident. Undertake any other activity which is of a preparatory or auxiliary nature for the non-resident person. So if there's any other activity done by a non-resident through an office or a person in the UAE, but those activities are preparatory or auxiliary. Generally, preparatory or auxiliary activity refer to those activities which are incidental to the overall business operation, but they are not main to the generation of the business income. Now, in order to decide whether an activity is a preparatory or an auxiliary activity, one needs to ask for certain questions. These questions may differ from, the applicability of these questions may differ from business to business, but at a general level, these are some of the things that one needs to look at to identify if a PE exists. The first one is whether the activity of the fixed place of business forms an essential and significant part of the activity of the enterprise as a whole. Now, let me give you an example compared to what we saw in the preceding slide. So we said if a foreign company has an agent who is purchasing goods for the non-resident. Now, when these goods are purchased for the non-resident, if the non-resident is engaged into manufacturing, right? This is an important but not the significant part of the overall business operations. But think of a person here, if a foreign company is engaged into procuring goods for a third person, and by doing so, it is earning commission, then this place, even though the activity remains the same, that is purchasing of goods, this foreign company may have a permanent establishment if its main business is earning commission from procuring goods. The second is whether the activity is carried on in contemplation of essential activity of the enterprise, right? The third is whether it is of a short period or a long period compared to the overall business activity. Now, while this may not be a sole proof, but this is also one of the important factors. So let's say if you are into consulting engagement and the typical period that you spend on doing the activity is 30 days. Now, someone comes here to meet a customer and spends 1 day. The time you've spent on a particular activity compared to the overall business activity is very, very small. Now, I'm not saying that incidental activities cannot be resulting into taxable income. But whether they result into a permanent establishment, for that one needs to see what is the time spent on an activity compared to the overall business activity. So a frequently given example is that of training. So when a non-resident is engaged into construction of, let's say, any particular activity, in order to do this construction, the non-resident trains certain employees. The period when the training has been given will be included to decide whether or not a PE comes into existence, because this is an activity which is very, very closely related to the main business. And the proportion of assets or employees of the enterprise which are used to provide this particular activity. The larger the amount of assets, the larger the number of employees which are used, the larger is the existence of a PE, the chances of having a PE. And whether these activities are performed for yourself or for others. When you do it for others, generally this is going to be a revenue generating activity, and therefore the chances of PE are higher. When you are doing it for yourself, I'm not saying a PE may not arise, but the chances might be slightly lower. So there are certain circumstances in which the paragraph 3 related to preparatory and auxiliary activities are not applicable. So paragraph 4 provides that the provision of clause 3 will not apply. That is, the activity will not be considered to be preparatory or auxiliary to a fixed place of business that is used or maintained by an enterprise by a non-resident, if the same non-resident or its related party carry on business activity at the same place or at another place in the state. So let's say the related party of a foreign company has an office space here, right? And this foreign company also has an office here. Now, if this foreign company uses this particular place, or this related party uses this place for the purpose of carrying out their business activity, then just because this foreign company may be doing preparatory or auxiliary activity from here would not give an exemption to the foreign company. And this exemption under clause 3 shall not be available. Let me see if there are any questions. None as of now, but in case you have any questions, please feel free to write that in the comment box. So the provision of paragraph 4 will not be applicable if the overall activity carried out by the non-resident and its related party at the same or two places is not preparatory or auxiliary and would together form a business operation, and where the same place of the non-resident or related party is a PE. So what that means is that after considering this and this activity together, if the overall activity is not preparatory or auxiliary, and together they are forming part of a cohesive business operation. So let's say one does the storing and the other is a agent who is, or other is concluding contract. In such a case, even though storing on a standalone basis would have been exempt from being a PE, because the other non-resident is concluding contract using this place, it will not be exempt under paragraph 3. The next one relates to the case where an agent is there in the UAE and he exercises the authority to conclude contract on behalf of the non-resident. So if there is an agent of a non-resident, right, and he habitually concludes contract on behalf of the non-resident. So let's say a foreign company is engaged into selling of goods to various customers. There is an agent in the UAE who goes to the customer, presents the catalog, explains about the goods, and negotiates and finalizes the prices. In such a case, this agent is actually habitually concluding contract on behalf of the non-resident. And therefore, this agent will be treated as a permanent establishment of this foreign company. Now, because this used to create a permanent establishment, many foreign companies, what they started doing was, they said, you go and present, you explain, you negotiate, but the signing of the contract will be done by the foreign company itself. To deal with such a case, later there were amendments which have also been forming part of the UAE law, where it says that if a person habitually negotiates contract that are concluded by the non-resident without material modification. So if the agent does certain contract which are concluded by the foreign company, then this agent will be a PE, even though the signing is something which is not done by the agent. Paragraph 6 deals with an independent agent case, and an independent agent could be within the paragraph 14(1)(b). So if a person conducts the activity as an independent agent and acts for the non-resident in the ordinary course of business, he will not be treated as a permanent establishment. But if the person acts exclusively or almost exclusively for the non-resident, he cannot be said to be legally or economically independent from the non-resident, he will be treated as a PE. Now, what is the meaning of these two? Let's look at a case which we were discussing earlier, where a foreign company had an agent, and this agent was concluding contract with customers. Now, if this person also sells goods and performs same activity for himself and others, then for him, there is no dependency on this foreign company. In such a case, he will be treated as an independent agent and will not be considered as a permanent establishment for the non-resident. On the contrary, if this agent does not perform for anyone, does not sell its own goods, and he works exclusively or almost exclusively for the non-resident, he will be treated as a PE of this company. There can be other conditions which can be imposed by the Minister of Finance, where, if the presence of the person in UAE is temporary, an exceptional situation, then it can be avoided. So sometimes what happens is that a foreign company may send a natural person to explore business. If such a natural person is temporary and exceptional, in addition to this, the activity conducted in UAE are not the core income generating activities. Non-resident does not have any state source. Source income is something which is discussed separately. So then this cannot be treated as a permanent establishment. 3, the activity should not be core income generating activity. So for example, if this person is into providing tax services, he comes to UAE and deals with a contract with a customer and makes tax advice here, then the activity that is there is core activity of the foreign company. Therefore, the exemption will not be available. Right? But if he is into selling of goods and he just gives some ancillary tax advice, that may be a case of not forming a core income generating activity. Second is, there should be no income which is generated out of this particular activity for the foreign company. If there's income which is generated, the exemption is not available. With that, we come to an end for the session today. And I'll just see once again in case any of you has any questions. Seems we don't have any questions for today. Right. So thank you for being there. And I apologize once again for the technical glitch due to which this webinar was not available. If there are any particular topics that you want us to cover on UAE Corporate Tax, please leave a comment in the section and we will try to our best to do that at the earliest.